I used to get so frustrated, taking loss after loss trading catalysts. After reading the headline or the earnings number, thinking I knew what was going on. I would see tons of stocks make massive moves after earnings, and it wouldn't be the stock I was in. It sucked. Then I learned what really moves these names. This is a process that I put hundreds of hours into figuring out. And in the end, there are 5 things that I found really matter. Today, we are going to reveal those 5 checks in favor for grading a catalyst play. And the 4th one you're going to want to pay attention to, because this will make or break your success in this play. With these catalyst plays, we're looking for potential year-making moves. The whole game is having the information to ignore the maybe setups so you can focus on the overwhelmingly clear ones. So how do we identify these crazy clear setups? We're going to pull back the curtain on our process and break down how to interpret a catalyst in detail, how to use pre-market scanners to hunt for institutional volume, and find these names before the market opens. Welcome to the Trading Floor Podcast, episode 11. I'm Tim Belden, joined as always by Garrett Drinan. So Garrett, you were the one last Thursday that found this trade. It was an earnings day one in Fastly, and you found it in pre-market and alerted our team. So what were you doing that morning?
Yeah, so Fastly was not on our radar. It was not one of the earnings plays that we were like anticipating looking at. We weren't talking about it the night before. But I have this scanner that we use that I really love this thing. It's so simple. And we call it the pre-market extended hours percent AVOL scanner. And it's something we share in Bionic Trader inside access meetings. I talk about this all the time because we use it. And we actually found this scanner or this particular indicator variable that we developed from doing some of the quant work, right? We were testing an earnings model, trying to figure out what actually mattered to these plays. And we found that the more volume as a percent of its daily average volume the stock was doing in the extended hours, right? So when the report comes out in the after hours, or if it's a pre-market report, you're just looking at the pre-market, the more volume it was doing, the higher probability of trending and making a move on that day. And we actually found that if any of them are doing like less than 20% of their average daily volume, it really wasn't worth looking at.
For the earnings,
For earnings plays, right? Because they tend to do a lot of volume. So this is all like calibrated to earnings plays.
Would you like to gain the biggest edge a retail trader can get? All of our daily and weekly in-house trader meetings are now available to you. Just head over to smbtradingfloor.com to find out more.
And so I was just looking at this scanner. It's earnings season. Think of the earnings season. This is like how we find names that we might want to look into. The reason for it, the reason I love this so much is there are so many earnings reports to look through. Like I can't go into depth on every single report that comes out, especially when there's like hundreds of names reporting all at the same time, right? So this is just a brilliant way of narrowing down that focus and like finding the names that you might want to look deeper into. And so sometimes we see 20%. Okay, that's cool. Like that's something definitely anything over 20 we'll like look at. But sometimes we see 50%. Sometimes we see 80%. 80% is big,
huge,
right? We rarely see that. Fastly was doing 200%. Like we haven't seen this in a very long time. And that's it. That's what put it on our radar. I hadn't looked into the report yet, but I put it right in the chat being like, we got to look into this. What's going on here? And that kind of snowballed, right? Because then you got a hold of it and kind of ripped that report apart, which was great because you kind of came back to us pounding the table a little bit on some of the things you were seeing.
Oh yeah. And there's our first check in favor.
Exactly. So volume is always a big one on these catalyst plays, right? Because like why is volume to you important? Like obviously we've studied this on the quant side and we see that it is, but a lot of times when we like to actually take something and run with it, we want to sort of connect that to something that makes sense to us as traders. Like why does it make sense that something needs to be doing tons of volume in order to be valid on one of these plays?
Yeah, we've found it's the best way. There are other ways to scan for earnings. Like you could just look at the gap percent. And then what I found is you just look at the gap percent. It doesn't tell you enough if you're not looking at the implied move. But the whole reason why the extended hours AVOL, percent AVOL scanner that we have works so great is we're trying to find stocks in play. So stocks in play are stocks that are doing abnormal volume in the regular trading hours. So we're really trying to get an idea of what stocks are the most in play. And we found there's a pretty good correlation of the stocks that do the most volume in after hours and pre-market that then become in play intraday. And that's the whole game.
Yeah, and like the way I kind of read that is like we want to make sure there's interest
Yes.
in this report. Like obviously institutions can't do all their business in the pre-market, like the big ones, right? Because might take them days to get involved in something that they really want to accumulate. But we've got a lot of big institutions kind of doing the work for us, right? They've got people looking over these reports and reporting back, and the algos are on these things, and typically the names that are generating the most interest based on that earnings report are going to be doing the most volume in the pre-market or after hours. So it makes a lot of sense. It's like just follow where the interest is, right?
And there was a trader that we've talked to a ton for earnings, where what he would do, and it was very similar to how I think a lot of institutions is, report comes out, you're buying some off of the read through of the report that you're doing quickly. And then, you're buying more when it stabilizes in after hours, you're buying more in pre-market. And then the institutions are then buying the first day, second day, third day, fourth day, because it's that much volume. But if you have, I don't know, let's say hundreds of institutions doing that in after hours, that's the interest. That's the significance.
Yeah, that's the tell. And so we want to have high volume in the pre-market, and that's a great way to scan. We want to have high volume once the market opens, right? This is a key criteria for how we're going to grade this play.
Volume's massive.
And it's a great way to find it. And it's one of the edges that we have as discretionary traders, as prop traders, or as retail traders, right? We're smaller. We're not trading $1 trillion, right? So we can get in and out. We can trade in the pre-market. We can get our whole position at the open. So that flexibility of liquidity, of being able to get in and out, is actually an edge that we all have. And so we should use that, right? And so we're using tools to basically pick up on the footprints of some of these institutions, and then we're kind of using our edge to be able to get in and out much quicker and get our full position early. So Tim, what I want to ask you is, once I handed this to you, you really made this trade your own. And it was a huge help to the team, because we both looked into the report, but we kind of looked into it in different ways,
different lenses.
And different lenses. And you've really developed quite an amazing process at dissecting some of these catalysts that come out, because that really is obviously a big component of it.
Do you want to sit in on all of our daily and weekly in-house trader meetings? There's no bigger edge retail traders can get. Visit smbtradingfloor.com to learn more.
It's not just read the headline. Let me kind of see if they beat, right? There's a lot more that goes into that. And we're looking at the chart, right? We're looking at can this actually run? Is there room on the chart for it to run? Is it breaking out, or does it have resistance? Does it make sense? We're looking at the theme that it's in. Does that actually make sense for this type of stock to be running in this environment, in this type of market? So there are a bunch of factors that are going into how we're going to grade this setup. But I really want to dive into what you were seeing that morning, because you were super clear on this, and you were picking up on some things that I think that, like you mentioned in that intro, a lot of beginner traders are kind of scratching the surface on these catalysts and not digging deeper. And I know I used to do this too, thinking that I understood what was going on, when really I knew nothing about reading. Did they beat and raise? And you literally barely know anything about what's happening. So when I'm handing this off to you, what's the first thing you're doing? What are the questions that you're asking to help us figure out if this is a catalyst play worth taking?
100%. And to start, I am looking at the headline numbers. Step one, I'll look at what everyone's looking at. And what I've found is like the big difference with really being able to analyze these earnings reports and like actually interpret what the read through is a lot of the time, and I've done this when I started my career. So like in terms of getting to here, it's studying these plays, studying examples. But so often you get the numbers and you think, all right, I read the numbers and I have to make a decision if this is a good report or not. That's it. And you try to have like a two-step process. And my whole process now is like you see the numbers, that's step one. But with earnings, like for example, here, let's even pull up. Kurt, do you want to pull up image number 3? So here are the numbers for Fastly. So like right off the bat, you can see the percent beats. You get an idea. They beat EPS 12 cents to 6 cents. They beat revenue 173 million to 161 million. Upside guidance, you see that next quarter and fiscal year, good raise there. So right off the bat, you get the double beat and raise. But if you're really trying to figure out the whole point of our A+ catalyst plays and looking for these special changing fundamental earnings reports isn't do they double beat? Is this an okay, like they just beat? That's a good report. You can't just look at it in a vacuum because what you're trying to find is an inflection in acceleration quarter. So by definition with acceleration, you can't see acceleration without comparing it to a previous quarter. So right after I'm looking at the numbers face value, did they beat, jotting it down. Now I'm thinking, all right, what were the last 5 quarters? Because I need to build a story of this stock.
All right, so you're looking at whether this is an inflection quarter. What other types of quarters are there? Because I've heard you talk about this with the team where it's almost like you're breaking down these quarters, types of reports, in other words, like into categories to simplify it for yourself rather than thinking about like everything's different and this is just kind of like a big like choose your own adventure. I wonder if this is good. Like you actually have sort of categories that you put these reports in. Can you get into that?
Oh, yeah. Oh, yeah. So what I noticed with looking at these reports, it's not like you just get this inflection quarter out of the blue. There's like a very systematic like stage process that these companies go through where it's not exact science. It's not every time like last quarter, it has the first stage and then it has its inflection, then it has the third stage. But usually each stage will precede the latter. So if you're looking for the inflection quarter, the first type of earnings report that I'll look for is I called it, but it's a first clean profitable beat quarter. So this is the first time they've turned profitable. EPS could be GAAP or non-GAAP, but they're making money. In the first clean profitable beat quarter, usually you'll see a strong day one, not always. Usually it gaps up. But in order for me to look for that inflection acceleration quarter, I want the stock to have had a first clean profitable beat quarter. So those are the two right now. So it's first clean profitable beat. Okay. Now I'll look for the acceleration inflection quarter. And then usually either the quarter after or quarters following the inflection acceleration quarter, you'll get what I call a good stock continuing to crush it, or they're still crushing it quarter, where the numbers are going to be huge. They're going to have maybe even bigger percent beats on their top and bottom line. The revenue growth is still going to be strong, but it's not that huge jump in revenue growth and not that huge acceleration in revenue growth and EPS growth that we saw in the inflection quarter. So it's a good stock continuing to crush it.
And those are the quarters where sometimes the stock is run a lot and it actually gaps way up and kind of sells off, right? It's like a bunch of profit taking. That can happen.
100%.
So the quarter that we really want to identify to keep things really simple, if we're just talking earnings plays, sounds like the inflection quarter, that acceleration inflection quarter is the one we really want to pinpoint, right? Like the other ones we can trade, but like this is the bread and butter. And if we can go through earnings season and find these, like that's where we want to do our business. And that simplifies things like quite a lot to me, at least with the way I think, because now I'm not looking at every earnings report almost like in its own universe, trying to decide like how good is this.
Exactly.
You know, you start to break it down like into categories. It's like, okay, has it had its first clean profitable beat quarter? Okay, when was that? Let's go look back and see where that. Okay, that was here. This is how it acted. Okay, good day one went sideways. Maybe the next quarter was like a non-event, and then maybe here we are now with a big beat and raise. And the question that we're asking ourselves is this the acceleration inflection quarter? So, and if it is, we want to do some business. How do you quantify this? Like, how do you tell if it's the acceleration inflection quarter?
So the whole idea with these companies is they turn profitable. So they're telling the street that they're making money. The business model is working. But then what you're really looking to see is a huge jump in revenue growth year over year. And you're looking at the past quarters to be able to see that. So with Fastly, what was super interesting, you get your first, we're going back to Q4 2024. So the revenue growth year over year was 2%. They're losing money, 3 cents a share. Next quarter, it's 8%. So massive jump. I mean, 300% jump there. Still not profitable though. Then you get Q2 2025, 12%. So then what is that? 50% jump between the past two quarters. Still not profitable. So now we're going into Q3 2025, and this was their first clean profitable beat quarter. So they make 7 cents. So I'm not paying attention to the revenue growth from Q4 2024 to Q1 2025. It's massive, but they're still not profitable. But then we get this quarter where revenue growth comes in at 23%. So the previous jump, the rate of change between the revenue growth in Q2 2025 to Q3 2025 was 12 to 15%. So 25% rate of change. Now going into this report from last week, this is now back to a 50% estimating 50% rate of change. So huge jump in the revenue growth, AKA acceleration in revenue growth after turning profitable.
So why is that significant to you? Does this have something to do with those participating in this stock are now able to project revenue into the future and more profitability into the future? And is that why, people aren't waiting on reports like this and these things get so much legs on this type of report?
I would say exactly. Like with any catalyst, not just earnings, like the big three things you're really trying to figure out is like, what's the surprise factor? How much did this catch the street off guard? Then you're trying to decide how much more future revenue visibility do we now get in the stock? And then third, is this a catalyst that's going to cause the street to re-rate this stock and the valuation isn't right? So with the revenue growth, it's a big one for number two there, where you see the revenue growth. Usually it depends on the sector, but this could be in the form of RPO. So like their remaining obligations, this could be their backlog, like growing at accelerating rate. But the idea is they're not just making money. That last quarter, the first clean profitable beat quarter, wasn't a random one-off quarter. Like they're sustainably making money. And now they can see in the future that revenue growth is accelerating and they're going to make even more money.
All right, great. Let's throw the chart up.
Yeah.
Slide number 5, please, Kurt, just so we can get a little, this is like a work of art a little bit, like just so we can see what this thing did. Breaking out of a nice little base there. It still has resistance. You can't see it on this chart, but ran like 90% on day one, including the gap, and then had a nice follow through on day two. It's exactly the kind of action we want to see. The thing that jumps out to me is that volume, like we talked about earlier, right? It's like by far the biggest volume bar on the chart. That's a hallmark of a play like this. You rarely ever see a move like this without that volume. What I like about our process is that you can kind of see that volume before it happens, because obviously that candle closes and you see that big volume bar. You don't really see that volume in the morning, but looking at that pre-market volume in terms of its average daily volume, seeing that it was printing 200% between the after hours and the pre-market that morning. I remember talking to some traders who were looking at this saying, yeah, I think I'll trade it if it does pretty good RVOL, like in the morning, then I'll look at it. And I remember saying, it's going to print really high RVOL. Like we
Yeah.
already knew that because of this indicator. Because if it's doing 200% in the pre-market and the after hours, it's gonna do a lot when the market opens. And when it did open, I mean, it was doing 30, 40 RVOL, which is huge. 30, 40
Massive.
times its average volume, at least like right off in the morning. And it just exploded out of the gates, which is exactly what you want to see. So I just wanted to highlight this chart because this is really like a beauty. But the thing that I'm so interested in a play like this, and the more we trade this, because this is a very specific playbook. Like this is an earnings play. The broader category would be this is a catalyst play. So we have a certain way, a certain operation around a catalyst play, a certain way of trading it, and a certain way of grading it, like figuring out, are we going to take it, figuring out how much risk we're going to put on. Is this really, really good, or is this just kind of good? And the thing with this play is like so much of that work happens before the market opens. And so like everything that you just went over, you can know before the market opens. And everything that we talked about with the volume, we can know before the market opens. So this is just like a classic stock selection situation. Like we always talk about how important stock selection is. With the most important inputs that we'll be talking about today that went into determining whether we wanted to take this and the grade of the setup were all known before the market opened. Now, of course, we want that price action to confirm our thesis. Like we're always looking for the market to tell us that we're right. And so, of course, we want to see that price action and the volume when the market opens. But there's a lot of power in knowing what stock you're watching right off the open. Because I think I bought this thing on like the first 2-minute bar because it broke that pre-market high. This is not the kind of name that I would want to be caught off guard on and say like halfway through the day, have someone say, oh my God, did you see Fastly today? Like this thing ripped, right? Like that's what we're trying to avoid with this kind of process. I want to get into more of what we did in the pre-market before we start talking about like how we traded it and like looking at that intraday chart, because I think that's just so important because we really teed this thing up and had plans of putting like X amount of risk on if, X, Y, and Z happened, like, by probably 9:00, like as a team. So what are the other things we're looking at? We're looking at the chart. We want to make sure it can run. What else? What are the other factors here?
Here's a mind-bending stat for you. S&B traders have 20x to 40x higher odds of success than independent traders. Find out why and how to greatly increase your odds by visiting smbtradingfloor.com.
So just to even reiterate, like the catalyst is one check in favor. We're grading this an A+ catalyst. So that's one check in favor. Then we're looking at the higher time frame technicals. So right now we're just looking at the daily, but this is a stock that ran in COVID, got sold insanely hard on the weekly, and now had a nice weekly base at near the lows. So it was breaking out of this weekly base and above this weekly breakout level. So we have our higher time frame technicals check in favor. But even, I'm bringing the catalyst to the table. That's just one piece of the pie. So then we're thinking like whenever you see that revenue growth, like it's super important to then ask another question. So like the whole idea is you keep digging deeper, but you see that growth and you're like, well, how are they doing it? Like what's changing? Like how are they making so much more money? How is their top line so much better? And then you start getting into the theme, which is another check in favor, which you did a lot of work on with this. But the idea is you want to have an idea of like, what's going on? Like this is an inflection quarter. Why?
Yeah, absolutely. It's like you see that growth and you want like, what's the reason for that growth. Like that's something I'm always interested in, because especially in a market like this, right?
Oh
Like,
yeah. I mean, talk about a theme market.
Yeah, it's, I mean, we like how split is this market right now? And of course, like everyone's talking about it. Like I feel like dispersion is like the word of the year, and
Yep.
like everyone's talking about that, but it's true, right? Like we've got some themes and some groups that are running. We've got some that are just completely dying out, and a lot of it has to do with that AI disruption, right? So
Oh yeah.
things that you can touch and feel and drop on your foot are running. Things that can't be disrupted, like airlines and cheeseburgers. But you've got software just taking it to the chin, because the whole market is just completely freaking out. And it seems like nobody really knows yet, because I mean, they're selling the whole basket. It's like there's no software name that's going to survive. I'm sure something will, but like it's like no one knows what's going on right now. So let's just sell all the enterprise software as a service names are just getting crushed. Let's buy oil and infrastructure
John
and
Deere.
and John Deere and McDonald's and airlines, right? So it really matters where you are in this market, right? And that was at the forefront of my mind this morning when we were going over this, because when we saw that big beat, I'm thinking, okay, like I haven't really traded Fastly in a while. Do I even remember what they do? But of course, I went to our theme tracker, our Notion database, which has lists of all the themes in the market, and we do a really thorough job of compiling these baskets down to all the software themes, like enterprise and gaming and digital infrastructure, which would be like data centers and edge computing and cloud and networking, and I could go on and on, right?
I want to stop you real quick, or you can keep going. I wanted to say this one was even crazier in terms of theme. It was so misinterpreted what theme Fastly was in, and you cleared that up for everyone. But a lot of people thought it was software. All right, continue.
A lot of people thought it was software, because traditionally Fastly is cloud, which is very closely tied to software, because initially cloud computing was really for software, because software was the big thing. That was the application. I'm already saying was, as if software's dead. That's
dead.
Sad. That's right. This is probably just buy software now is probably
all in IGV
marking the bottom right now. But cloud is infrastructure. Cloud is not software as a service. It's not enterprise software. It's not the application. It's the infrastructure that allows for things like software to occur, and also things like AI to occur. So if we break down the taxonomy, and this is why I love tracking our themes, because it makes it crystal clear, is that like cloud infrastructure is not under software, even though it's linked to software. It's under digital infrastructure, along with all of the other physical infrastructure that is being built in order to enable artificial intelligence. So a lot of people thought it was software. It's not. But if you look deeper in that report, and this is what I was finding that morning while you were looking at all the numbers, and I knew you would do that, so I didn't even get into it. I was asking the question, like, why did they beat? So where do you go? Well, usually it's the conference call, right? Yep. The CEO is going to like tell a story. So I'm looking for the story. I'm trying to answer the question, where does Fastly fit in to our theme taxonomy, and therefore the overall market, like this entire disruption that we're seeing? Is it a winner or a loser? Where is it positioned in all of this craziness that we've been seeing? And the CEO was talking about how a large part of their acceleration and their beat was due to their edge computing component. And that got me excited. Like bells started to go off, because, and he even said like, this should scale with AI. And we already know this because we've been tracking edge computing. Now, this is the theme that hasn't gotten hot yet. It's not like currently on the tip of everybody's tongue, but it's a theme that we're tracking because It belongs under that digital infrastructure category. It's a theme of names like AKAM, ACAM, NET, ANET. Like these are all names that are also in the theme. ACAM's like one of the leaders that are helping enable the inference to operate away from the data center. So that might mean in a device, that might mean in a car. It just means if you need that inference to happen really fast, you can't wait for that signal to get all the way to from the data center to where you are. Like, so a car is perfect example, right? Like it needs to make a decision quickly. So the more AI story expands and it gets beyond just the LLM on our browsers, right? It gets into our devices and in our cars, and in that story, in robots, that story starts to develop and accelerate. Theoretically, edge computing demand should increase because that's what is enabling all of that stuff. And so if a big part of their beat and acceleration was due to their edge computing component, because this isn't an edge computing theme, and they're traditionally a cloud company, which is also infrastructure, they're clearly not software. They're clearly not in that category that's being cannibalized by AI. Instead, they're theoretically in a category that should be growing with AI expansion. So that alone made me feel a lot more interested in this, because not only did they beat tremendously, but they beat in a way that aligns with the way the market is acting right now, which is rewarding infrastructure and rewarding those names that are either A, immune to AI disruption, or B, helping it or joining it with AI, right? And they're punishing names that they're worried about being cannibalized by AI.
Garrett, do you remember? I think it was either maybe our 4th episode when we were talking about the data centers and we were talking about our notion with our themes. And that was like right when we were just starting like digging at the surface for edge computing. And we were like, oh, this could have like real applications in the future because you need to have it happen on the edge, which is what you're saying, closest to the source. And then there's even like stuff about maybe this has a role in medicine later on because it's like confidentiality. But I don't know if you remember, we talked about edge computing at the end of one of those earlier episodes. And
I think
you do the work for this. Like,
this is why we do the work. We did an episode on themes and why it's valuable to track themes. And I think we called out edge computing as something to keep an eye on because, it's fun to do. Like, this is great. Like we get to learn like a little bit about everything. Like that's what I love about trading is like we're not experts in anything, but we know like a tiny bit about like a million different things.
Mile wide, inch deep.
Tracking these themes is a blast because it's wild, especially in these times. And so I mean, it's really dumb. Like it's super meta too, because you're just going on AI to kind of do some research about AI disruption. But ask ChatGPT or Gemini or Cloud or whatever you
Perplexity
use.
Comment Assistant.
Just have a little chat about it. Like, hey, what could be some disruptions down the line? Like if AI expands in this way, like what certain technologies might become hot themes, right? And these are the simple questions to ask. And you start to do some research into those names to kind of verify it. And you're like, oh yeah, this is cool. We might as well track this. Who knows?
You know what was a cool tidbit with this too is you do the work on the themes and we're like, oh, net is a big competitor. And then go back to interpreting the catalyst. What was an interesting aspect of this report was you look at the valuation difference between Fastly and Net, and Fastly was trading at 3.5 times sales, and Net was at 25 times sales. So to answer that third question, does the street need to re-rate this stock? Is there a potential for a re-rating? You see the valuation gap, and you're like, oh yeah, maybe. Like, definitely could have a re-rating. So even that's where the theme helped me at the end. Like I did a little work after you saw. net.
Oh, right, because you never would have compared it to net if you weren't thinking edge compute.
And
Yeah,
you're
yeah,
thinking
yeah.
a different theme where, like, at first too, I was like just making sure, double checking it wasn't an IGV. Like that was my first order of business.
Right, yeah. We're not allowed to buy anything in IGV for a good
Yeah.
6 months.
Give it a sec.
That's not true. That's not true. We were probably trying to bounce it.
But the theme's super important. And then
Yeah.
honestly, the last part that we talked about that morning was the market environment which we were in, which is our last check in favor. So at this point,
Yeah.
like we're grading this an A+, right?
Yeah.
But then we're looking at the market environment and we're looking at how other earnings plays have followed through. How are breakouts been trading? What's the market behavior? And what do we glean there?
These earnings names have not been working.
Yeah.
Like a lot of the gap ups have been failing. I mean, breakouts in general have been tough. And of course, like this comes with a huge caveat because it matters where you are. I mean, I could sit here and say breakouts are not working. And then if you're like an oil trader, you're like, what are you talking about? Right. So that's not necessarily true, but generally like growth stocks, tech stocks, like they've been, the Qs have been stuck in a big range. And we haven't seen a lot of these big inflection quarters this quarter in tech stocks. And a lot of these day ones have been kind of rough. So just from an environmental market behavior standpoint, that was really the only factor of this trade, to your point, that wasn't kind of all systems go, right?
Yeah.
And we were keeping that in mind because I mean, I don't think we'd had like we haven't been really taking many of these, but like the last few we took were kind of duds, and a lot of the things we've been watching have been kind of duds. So that factors into it. Like the environment is pretty big. So that downgraded it to an A when we got the final grade, which happens.
And swing trading in general has just been very difficult. And this is a swing trade for us. But we'll talk. Right. Yeah, we could get into the actual execution because there's many ways to play a stock and play like this. But what were you going to say?
Well, so just to review, so we've touched on the 5 things now.
Yeah.
So we had the volume. So that's pre-market. Checking that in the pre-market and then seeing once the market opens, we want to see that volume there. And we'll talk more about the intraday stuff. We want to look at the higher time frame chart to make sure that there's room to run and that there's some kind of like a base breakout. We want to look at the numbers of the report to identify whether this was an inflection quarter, right? Look for that acceleration, see that we've already had our first clean profitable beat and that this is now the inflection quarter. And then we want to understand what's the story? What's the theme? Where does this fit in to how the market is behaving and which themes are hot and which themes are getting slam dunked? And then we look at the overall environment as an overlay to just kind of check ourselves to make sure that like in a super hot environment, this would have been A+.
Oh yeah, 100%.
Kurt, could you bring up please slide number 6? Let's check out the intraday action because I don't want to gloss over how important it is for us to let the market kind of tell us that we're right, because I mean we're sitting here kind of pounding the table and we were pounding the table that morning and you did a great job of that. And there is a lot of power in the pre-market prep around this as we're kind of outlining, but at the same time, I mean, we've been wrong a million times. So we can't just, we can't just go on that. We want the market to tell us that we're right. So what happened that this morning that told us that we were right? Because it happened pretty early on.
And for our joint, that's how we went into the trade. It's like you have high conviction. We need price action to confirm. But yeah, right off the open, we get a huge candle, a ton of volume comes in, and you see that volume come in the first 2-minute bar, and it breaks above the pre-market high. So that's the first confirmation signal for us.
Yeah.
And then it doesn't fade. It doesn't just like wick the high. Volume keeps coming in, and we get a massive first 2-minute bar.
Yeah, and on a lot of these that run, I've noticed, and we've studied these, like you get you get a power ignition candle like right off the open. Like you don't always do. There are great like swing trades that don't start that way. But what I've learned is if you do get that and it holds and doesn't just stuff and does great volume and follows through, like the probability that we've got a runner on our hands is like much higher, especially backed by all the things that we've kind of gone over, because you've got a bunch of institutions that are piling in at the open, right? You've got that opening imbalance, and you've got that first, like we always look at that like first 2-minute candle and like the volume that first 2-minute candle did. And when we see that, we've seen so many examples of these earnings plays where it just goes off the open. And we actually like that. Like we're not afraid to chase something like that because it should go much higher.
And we've seen on the high short interest names that they tend to do that more often as well. And this was, I believe, 12 or 13%. Was it? I think 13%.
Yeah,
short float.
Yeah, which is that's a good bonus factor for a trade like this.
Exactly. Kind of just like alludes to the explosiveness potential.
Yeah, I mean, it's not necessary. Like it's not something we always look at because sometimes these are just great plays, but they don't have it. But if they do, I think what I've found in studying these is that it can really open up a great day one when it has like a higher short interest. Like it doesn't speak as much necessarily to like the full trend, like on the daily chart, but you see a lot of these day one, these massive day ones with high short interest names.
Have you heard this study of tens of millions of traders, which shows that only 1% of retail traders actually make it? Don't be a statistic. Visit smbtradingfloor.com to greatly increase your odds.
So yeah, we get that pre-market high break. And at that point, we're like, oh, this is game on. This confirmed our conviction level. We were right on this read through. The volume's proving it. The price action's proving it. So then it became a game of how do we want to accumulate a position for the swing trade for our catalyst play setup. So one spot I know you bought, Garrett, was the pre-market high break. So that was the first spot. And then at that point, it has a pretty big opening drive. And what we did to execute was just looking to get involved on dips. We got some on that opening drive. And then we were like, let's continue accumulating and building this position on dips. So you can kind of see those dips back to the VWAP area. There's like 3 pretty significant ones. And that's where we were building in our swing position with stock. And also our mentorship program, we've been doing there's also a play to use calls that someone did later on, which was interesting, but we're executing. We were just using stock.
Yeah. And what I thought was great about Cam, who's a member of our team on this play, everyone's got different strengths, and Cam's great with price action, and he's a really good active trader. And like, he might not be looking into the report at the same depth like that you are, for instance, and therefore he might not be pounding the table quite as much in the pre-market. Like he might be deferring to you like, okay, this is definitely what we're watching. I trust you. I've seen you do this a million times. But he is waiting for that confirmation. And what was great about this morning was I remember Cam, who was kind of quiet about all this in the pre-market. Like we knew he was on board, but not everyone has different roles, right? So it was like you were really pounding the table before the market opened. Like, guys, this could be a really big play. Here's the grade. This is what I'm thinking. This is why. That was great. Didn't hear as much from Cam. He's just like, okay, cool. Market opens, it explodes, pulls back, and then holds. And you could see after a big explosion like this, it started to hold on the tape above VWAP. And the market was really weak. And this was way stronger than the market. And Cam he just woke up like out of a slumber. Like we hadn't heard him at all. And he goes, guys, Fastly's acting really well. We need to be getting a lot bigger than we are right now. And it was a great moment because like he wasn't saying anything about risk or size until that point. And then all of a sudden, like a switch got flipped, and he was just like, guys, this is it. Like, this is working. Like, let's get this thing.
Yeah.
It was great. It's great to have communication like that with like people with different skills. It's kind of the point of having a pod.
And at the same point, yeah, we have a team of 4. Shane was in there also using his price action trading skills, executing a good amount for us as well. But it really helps having a team because, yeah, Cam pounding the table intraday really helped us get up to the risk we wanted.
Yeah. Then there was a great day trade out of that first consolidation above VWAP. That was a place to add to the swing. That's where I added. I think that like if you're scalping it, like the great part about this is like even if you're not a swing trader, I think you can do all of this same analysis for this kind of a play to understand the tailwind that something like this might have. And then you're just scalping it to the long side. And this certainly offered like plenty of opportunities to do so after it went sideways for that period of time above VWAP, as you know, it showed tremendous relative strength while the market sold off.
You're talking about that wedge breakout after the 2-3 higher lows.
Exactly. And you know, it starts to turn up, takes out highs, and then it trended, you know, for almost the rest of the afternoon off of that. So I thought that was a great spot to add to the swing or to just be trading it. And the tape was really active. The spread was really narrow. You could tell there was a lot of order flow. Like it was that kind of thing, right? And like sometimes you don't get like that much of an active tape on some of these earnings plays. It kind of depends upon the name. But this one kind of had everything, you know, especially once the market opened. So you could have got, you know, you could really control your risk in this play. Like it was tight.
That was my biggest review point of this trade, actually, where, like you said, you can control your risk. This gave a great intraday opportunity where I was mainly focused on the catalyst play and the swing trade, but that consolidation break above VWAP is a spot where you can double your profits, taking that as a separate trade in an active intraday trade. So that was my biggest review point. And then the other aspect of this trade that I thought was interesting was when the market gives you so much on day one, where this is a swing trade, but we were taking profits because this is a huge day one move, one of the biggest we've ever seen.
Yeah, it was, and you're right about that intraday opportunity, and that's the kind of thing that you just don't know in the pre-market if you're going to get. Like you don't know if the stock's going to give it to you, right? And you just got to take what the market gives you. So if you're watching this name, you're definitely watching the right name. And I think that, like to your point with the review, you know, you've nailed the potential of this kind of play by doing all that work in the pre-market. Then you're seeing it confirm, telling you that you're right. But then there's like another level where now it's like setting up intraday in really tight ways with tons of order flow, giving you another opportunity that nobody knew was going to happen and making like a really, really great day trade. Like to your point, like you can get a lot of size on that wedge break with a pretty tight stop and moves in your favor immediately and like trends for the rest of the afternoon. So that was a great play all around. So yeah. So look, we in the Bionic Trader meetings in Inside Access, we are sharing this percent AVOL indicator that helps us find these types of names. So join us. We are on Spotify now. For those of you who just watch us on YouTube, check us out on Spotify. It's the same exact episode, but on Spotify. And we will be back with you next week. Have a great week of trading.